Welcome to the 5th episode of Business Chronicles. I am Pallavi Agnihotri.
I am Sebastien.
In today's episode, we have the pleasure of welcoming Johanne Hague, the managing partner of Prism Chambers, for an in-depth interview.
Followed by the important tax deadline for the month of August, presented by Sishana Sanichor.
Let's now dive into the first segment of today's episode.
Welcome, Johanne.
Thank you very much for having me.
Thank you for joining us. And can you tell us a bit more about your journey in tax and your role as managing partner at Prism Chambers?
Sure. Tax and myself have had a bit of a strange relationship. I've been doing tax since 2005. I know I'm going to seem quite old now, almost 20 years. So I started doing tax when I was training to be a solicitor back in London. I was working for a firm called Linklaters, and I was immediately attracted by it because it combined doing pure black letter law, but also being involved in businesses and how they structure their affairs in a tax efficient manner. So that's how I started my journey. And it's been, a love relationship since. So I was practicing law in England for a long time. And then when I moved back to Mauritius about 10 years ago, I was quite surprised. I was surprised by the fact that it was mostly accountants who were doing tax, and lawyers tend to be generalists. And so I guess at the time, although I was a bit surprised by that, it made complete sense because tax wasn't as sophisticated as it was today. Our laws were quite simple. We had domestic companies, GBCs, 15%, deemed foreign tax credit. We didn't have exchange of information regulation. So it was fairly simple. It wasn't, it's not to say it was easy to be a tax practitioner, but certainly we didn't have to navigate through the complexities of today. But I guess even then I could see that the writing was on the wall. There was a certain trend going on internationally that I knew that sooner or later would catch up in Mauritius. So I guess I took a bit of a leap of faith and thought, I will try to practice tax as a lawyer in Mauritius. And here we are 10 years later, and as you can see, I'm sure you'll agree with me, tax has become increasingly complex, complicated, and it requires both accountants and lawyers to be able to practice it. So that's a bit about my journey.
Thank you.
Johanne, recently there has been the introduction of the Corporate Climate Responsibility Levy. How do you see this introduction impacting global business companies in Mauritius?
I think it was a bit of a surprise, to be honest, because we first heard about it in the budget of this year. And initially we thought, okay, that makes sense because climate change is something that we are all concerned about. And it is time that all stakeholders, including taxpayers, take accountability for it and contribute in rectifying the damages that we can already see of climate change. What was a surprise, however, is the fact that it does apply to global business companies. And I think it was a bit of a surprise, both in terms of when we look at CSR, corporate social responsibility, it's clear it never applied to global business companies. Global business companies, by their very nature, operate outside of Mauritius. They do business with entities outside of Mauritius. So there is certainly a school of thought that says that it doesn't make sense that they should contribute financially to climate change effects in Mauritius. So that's the kind of, philosophical argument to it. But there's also a financial argument. As you know, in 2018, although there was some grandfathering period, we got rid of the deemed foreign tax credit regime and we introduced the partial exemption regime on certain types of income only. So the reality of it is almost overnight, I exaggerate, but almost overnight, global business companies have found themselves paying from 3% to 15%, which is the default tax rate. That's all well and good. Some left, some stayed. They weren't terribly happy about it, but some stayed. I would actually say quite a few stayed. But now when you announce another measure, they found themselves going from 3% to 17%. And there, I think, although it seems like a very small amount of money, from an optical perspective, their school of thought is, well, where does it end? Are you going to introduce another levy next year and the year after? Am I going to be paying 20% in a few years' time? Is Mauritius still the right place for us to do business? Should I be going to UAE instead? Should I be going to Hong Kong, to Singapore? And we have seen migrations. So I think that I'm not in a position to comment on policy, but I hope that enough sufficient thought has been given about the long-term consequences of including the corporate climate responsibility to applying it to GBCs as well. Yeah.
Speaking of the partial exemption, Johanne, there has been some uncertainties in the current tax regime. How are companies dealing with the lack of clarity, and what advice would you have for them?
Well, if I may be candid, they are struggling, as you probably know. And I don't completely blame the authorities, although everyone, I guess, has a fair share of responsibility in all of that, in the sense that this is a new legislation. We are all dealing with it, not just in Mauritius, but also worldwide. As you know, the partial exemption regime came as a result of Action 5 of BEPS, where we had to make sure there were no harmful tax practices existing in various jurisdictions, including Mauritius. So this is a new law. There's very little case law. It's very fact-based. So although there are some conditions set in the law, whether or not you will satisfy SIGA is ultimately dependent on your facts and circumstances. So almost overnight, companies have found themselves with having to comply with a set of rules which are deliberately not prescriptive, which I welcome. So, for example, they're not telling you need to have X number of employees and X number of expenditure, which I think is a good thing, because you cannot have one set of expenditure on employees applying to a small GBC compared to a big GBC. So that's fair enough. But this leaves a lot of uncertainty. But I think where guidance would be appreciated is that one has the impression it's created more questions than answered, that created answers. So, for example, on points of law, you will be familiar with the infamous Alteo ruling, which is now subject of a Supreme Court appeal, where it is not clear whether incidental income can claim the partial exemptions, such as on interest income. So that's points of law. But we also have points of fact, such as, for example, what is the role of a management company and how can they contribute to satisfy SIGA? A lot of representations were made to allow outsourcing so long as they take place in Mauritius. So what has happened in practice is that a lot of management companies have broadened or enhanced their functions and duties to provide this service to the global business companies. But what we've seen in practice is that there seems to be a disconnect with the reality of the industry on one hand and how the revenue authorities are interpreting it. I was in a recent ruling before the Assessment Review Committee where, for example, a simple investment holding company advancing a loan to its subsidiary, so very, very simple, basic business, was compared by someone in the Revenue Authority to the functioning of a bank. This is not appropriate. This is my personal view, of course, and this is not proportionate, this is not relevant, and it's not appropriate. Of course, it remains my personal view for now. So I think this is where it's created uncertainty in the market. What do you exactly mean by substance one? And is it realistic and is it achievable, or shall I, as a global business company, simply pay 15%? And if you're going to deny me the partial exemption, am I better off going elsewhere? So these are some of the questions. Unfortunately, I don't have all the answers. Some of the cases are going through the court system at the moment, so we'll have to see what the court or how the court interprets the various legislation, which is going to take some time. But in the meantime, it leaves us in some kind of limbo where we're not really sure what's going to happen. So what I would say to these companies, at the risk of sounding like a typical tax practitioner, is make sure you get professional advice. Do not assume that you're automatically eligible to the partial exemption.
So, Johanne, you mentioned earlier that tax is becoming more complex. Currently, the Avago case is the major talking point in the tax community. What are your thoughts on the implications of this judgment, particularly in terms of transfer pricing and the application of international guidelines in Mauritius?
Thanks, Pallavi, for this question. That's a very complicated question that you've asked, simply because I think, as you will agree with me, it has been the talk of the town. It's a very long judgment, over 500 pages. I say ruling, not judgment. It's been awaited for many, many years. So it's created some shockwaves in the industry. I think I will not profess to provide a technical commentary of the ruling. I think that will probably require a self-standing episode on its own. But if I may share a few thoughts. I think one of the issues that Avago has highlighted in the industry is that gone are the days where we can do related party transactions without thinking of the consequences. Prior to the Avago ruling, there had been a couple of cases, including at the Supreme Court level. I'm thinking of the Inodis case, for example, where related party transaction had been considered. However, the reality is we do not have a lot of case law on transfer pricing in Mauritius. And although Avago ruling is only at the Assessment Review Committee level, it's not a judgment, it is not binding. It certainly set the tone as to both what the revenue authorities are starting to look at and how I wouldn't say judiciary because we're talking about the ARC, but how an independent tribunal, if I may call it like that, will start looking at these issues. So prior to the Avago case, and based on our experience, up to now, one of the main focuses of the revenue authorities had been to look at related party loans, and looking at whether in circumstances where loans were made interest-free or related party transactions where there were loans involved had an excessive interest, where the GBC is the borrower, or too low interest, where the GBC is the lender. So what we've seen with the Avago case is that we've gone beyond that now. So it's not sufficient to look at a structure and say either I'm satisfied the loan is at arm's length or there's no loans, that means there's no transfer pricing issues. We have to look broader than that now. We have to look at all structures where there are cross-border related party transactions and consider the issues from a transfer pricing perspective. The other thing that the Avago ruling reminds us of is that although there are plans, and I'm hoping it's sooner than later, up to now there has been no transfer pricing regulation or guidelines in Mauritius, and I think it's regrettable that we are in a state where it's kind of like blind leading the blind. Traditionally, complex structures have looked at OECD guidelines and tried to apply it, but the reality of it is the OECD guidelines does not form part of the law in Mauritius, which creates uncertainty. And whether or not one agrees with the ruling of Avago, I think it's important for businesses to start looking at their structures and at least start complying with OECD guidelines. They may not be successful if the case goes to court until such time as we have our own transfer pricing legislation, but at least they can comply with best practices. The other point I wanted to highlight, and I think I've mentioned it already, is the Avago case is at ARC level only. It is a ruling. It is not binding. It is dependent on the facts. I cannot comment on whether there's been an appeal to the Supreme Court or not, but I think it's important that people are mindful of the fact that this is not a precedent. Whether it's landmark or not, I shan't comment on that, but that each group, particularly multinationals, should look at their own circumstances. They may refer to Avago for some sort of guidance as to what may be expected of the revenue authority, but I don't think they should rely on it as a binding precedent for their own transactions. I'm sure there'll be occasion to talk more about Avago once there are more, I guess, certain transfer pricing framework in Mauritius, which I hope will be coming soon.
So, Johanne, recently the Cabinet agreed to introduce the Revenue Appeal Tribunal Bill. which mandates the Revenue Appeal Tribunal to replace the Assessment Review Committee. How do you view this development?
Okay, so that is hot off the press. As you know, the bill came out and was approved by Cabinet on Friday, last Friday, the 16th of August. Spending my Sunday afternoon reading the bill isn't typically something that I would do, but I did read through it yesterday. And I think overall it's a positive development. I think for a number of years now there have been some frustrations both from the part of the authority and the part of the taxpayers as to the functioning of the ARC. I don't think, and I'm not targeting anyone in particular, I think it by the very nature of things, it had become quite cumbersome, whereas the initial purpose of the ARC was to make tax dispute resolution more fluid. So I think the revamping, whether you call it a tribunal or not, I think the revamping of the tax controversy resolution framework is a good thing. And there are certain things in the bill that I think are positive. So things like setting clear deadlines for hearing of appeals and giving decisions. Although one could argue it's already the case in the current law, it sets a tone that tax dispute resolution, certainly at the first level of appeal before it goes to the Supreme Court, should be quick, it should be efficient, and it should, at the end of the day, we're talking about money. Whether it's the taxpayers or the Revenue Authority, both parties need their matters to be resolved quickly. So setting clear procedures and deadlines, I think, is a good thing. I also welcome the fact that the procedure is set in terms of an appeal rather than recently we've seen a trend to rely on technical arguments to try to kind of move away or circumvent hearing the case on the merits. And the bill has made clear that the tribunal will operate in a way that is not formalistic and is meant to be simple and efficient. So things such as allowing to summon people, to hear evidence under oath, to require production of documents which will help the case in the opinion of the tribunal, I think are good positive developments. There are certain offences, criminal offences, that have been included as well, which I think sets the tone. It sets the tone that this is a tribunal that is going to take things seriously and that tax matters are meant to be resolved, at least at the first level, where we're talking about points of facts, not necessarily points of law, meant to be resolved quickly. There's also a framework for mediation, although we do have some wording already in the existing law that has been expanded, and hopefully that will be another route which will allow certain things to be decided quickly. The ability of the tribunal to decide things on the same day, I think, is a most welcome development, especially to give oral rulings. So simple matters such as deciding on whether 5% should be paid or not at the tribunal level, whether you filed a return or not, whether to deal with preliminary objections and preliminary points of law on the same day, I think is a most welcome measure. Having said all that, the proof of the pudding will remain in the eating. It's all well and good having a good framework, but as we've seen in other things such as AML-CFT, the FATF, blacklist, etc., it's the practice that will matter. So will the bill be implemented, will the act, if it is passed, be implemented in a way to give meaning to the spirit of what it was trying to achieve? We'll have to wait and see for that.
Thanks.
So before we wrap up, Johanne, is there any final piece of advice you'd like to share with tax professionals or businesses currently navigating the tax environment? Stay abreast of all developments and trends. As I mentioned at the beginning, tax is a live subject. It's an evolving subject. And unlike other areas of law, which changes from time to time, you might have 1 or 2 amendments per year or every few years. Tax changes all the time. Tax changes every year, both on the domestic level and on the international level. So I think that on the business side of things, it's important for a business to have a solid tax function. It often forms part of the finance function, and that is fine. But
tax is much more than compliance now. It's also looking at the advisory side, it's also looking at the transactional side. So it's important to have a solid tax function. For tax professional, of course, such as you and me, always keep abreast of the law. There's always new cases coming out. There's always new trends coming out. And for aspiring tax practitioners, lawyers or accountants, it's not for everyone. It's not, everyone's cup of tea, but it is an area which is always challenging you intellectually. It is always exciting. I might be a bit of a geek by always getting excited by it. It's perhaps not for everyone, but it is something that will enable you to look at various other areas of business, of law, of accountancy, of finance. Tax does not exist in a vacuum, so it allows you to see the world from a different angle. So I would highly encourage everyone to try tax as a practice area.
Thank you very much, Johanne.
Thank you for having me.
Thank you.
Thank you.
Welcome, Business Chronicle viewers. Let's dive into the important filing deadlines for the upcoming month. First up, mark your calendars for Monday, 2nd September 2024. Electronic submission of APS for quarter ending 31st May 2024 by companies. Electronic submission of return and payment of tax by companies with accounting year ending in February 2024. Electronic submission of VAT return for July 2024 and payment of tax. Electronic submission of monthly return of TDS and payment of tax deducted for July 2024. That wraps up our segment on important tax deadlines for this month. Stay tuned to Business Chronicles for more essential insights into navigating the complex world of taxation. Until next time, stay informed and compliant.
That's all for today's episode of Business Chronicles. See you in the next one.